Ted Lucas, Lattice just launched a new global small cap strategy ETF. There's a lot of small cap ETFs out there. Why should somebody choose yours?
We believe that small cap investing can be a significant way to enhance returns in what we think will be a low return environment looking forward. There are two problems with small cap investing. The first is, for most investors, they have a very domestically heavy concentration. Valuations in the US are quite high for small caps, both historically and against large cap stocks. The second issue is small cap stocks are very volatile and are very vulnerable during downside periods for equities. So we, in creating this solution, sought to address those two concerns.
Why don't you talk a little bit more about the valuation of your ETF? The ticker is ROGS. Where is it now?
On a price to earnings basis, on a trailing basis, it's about 13. That contrasts with a large cap or a small cap US-based index being about 40 right now, and ACWI, MSCI ACWI as a small cap global universe being about 30.
All right, why don't you break down where the investments are? This is a global ETF, so talk about some countries where you're invested.
Yeah, we felt it was really important to expand the opportunity set beyond just the US, so we cover developed markets outside of the US as well as a set of emerging markets. The way the capital is presently allocated, about 45% of the capital is in the United States, but then outside of that we have about 15% in emerging markets and the balance in developed markets.
And the big thing now is for everyone to hedge currencies because of the wacky things that central banks are doing worldwide. How do you handle currencies in your ETF?
We do not hedge the currencies. What we do attempt to do is reduce currency concentration. So certainly right now, the euro is on top of everyone's mind. Our approach to allocating capital actually reduces concentration in any given currency. So we have less euro risk than a typical developed markets small cap fund.
Understood. And what's next for Lattice? This is getting to be a very crowded industry, this ETF industry, but you're making some strides. You already have, I think, 3 other ETFs in the market. So why don't you talk about those and where you're headed next?
Sure. Well, our approach to investing really is to think about risk, and that is the driving force on how the strategies are constructed. The first 4 strategies that have launched allow investors to access the entire global equity opportunity set, emerging markets, developed markets, US, as well as global small cap. Interestingly, for many investors, even if it's a, say, 60-40 type portfolio construct, given that equities have much higher risk contribution, most investors have by far the lion's share of their risk in equities. So we feel that we've addressed the area of the portfolio that we can have the most impact. However, our approach really looks at how risk is allocated in traditional cap-weighted approaches and seeks to improve that. So we will be looking at other areas within real assets and potentially fixed income and credit.
All right, thanks a lot, Ted. Good
Sure.
luck.
Thanks very much, Greg.
Thank you for watching The Street.